Renewal increases, we will always look at the profitability of the business, and we go down to a very granular level. So we look at various sections of business, types of payrolls that we cover, and from that we determine the type of renewal increases that we will put through. With the increasing complexity, and Andrew's talked a lot about the external environment, which is completely outside of our control, we have to factor in those kind of issues as well. And of course, the premium pool has to be sufficient to pay the claims. So the additional claims that we're getting, the changing external environment, as a result of that, that's how we determine renewal increases, basically.
I certainly think, though, from a distribution perspective, I think our clients and our brokers out there can expect, and we haven't had it for a while, but double-digit increases, particularly in property as a class. I think one of our issues over time, Shanaz, has certainly been that we've been looking at giving sort of mid to a high single-digit inflation-related increases over time, but building cost inflation has definitely outpaced that. So we've been seeing this kind of widening of the difference between your actual sums insured versus your premium that you're paying, and that's opened up. And as a result, your effective rate has definitely decreased in our book over time. So the combination then of the soft market cycle, these decreasing rate increases, customers getting less than double-digit increases over a period of time and then of course this fundamental base shift that we've seen in risk on the ground has come into this space where now we're actually not getting enough premium into the pool, I suppose. And fixing that is about getting more premium in the pool, and it's also very much about getting that individual risk on the pool that's not carrying its own load, so to speak, needs to be managed differently. Anytime that you have a particular risk that is being cross-subsidized by everybody else, you actually have the effect of creating a vulnerability on your good risk because they actually become overpriced to subsidize your bad risk. So I think it's definitely a two-pronged strategy. We need more premium in the pool to subsidize the fundamental shift in the base rates of risk on the ground, and we need to be actively managing those individual risks that aren't carrying their own weight. And I think it's going to be a combination. So higher than expected or higher than usual increases, I think are something that we need to try and push through, as hard as that will be.
We rely heavily on our intermediaries to educate our clients about risks and to advise them on how to manage their risks. So so there are certain types of risks, for example, that Santam won't underwrite. I mentioned it earlier on, such as dynamite factories and things like that. But there are also certain occupations where we think them highly hazardous, and as a result of that, we're quite selective in how we underwrite them. So we will ask for more information, for example. We will survey the risk, and based on all of those, we will determine whether we have the risk appetite to actually write those risks or not.
I think our brokers also rely on us to use our actuarial expertise to really segment our risks well. So have a good idea of what is a good client and what is a bad client. And that's driven very much by claims experience, I suppose, weighted towards frequency as opposed to severity. So the number of times you claim drives an underlying loss ratio, and that drives a segmentation model. I think the other thing that they rely on us is to communicate clearly. So Shanaz has talked about our appetite for we won't write this risk, or we will write this, what we call undesirable. So there are those risks we won't write, and we need to communicate those more. Then we have these undesirable risks, which we might write if the circumstances around that risk really justify it. So I guess we have those two. The onus is on us to make sure our market understands it really well. So that's it. And then I think we've invested heavily in Santam. We have a physical presence in 51 cities and towns across South Africa, over 300 people who are broker facing. The education component that's been mentioned, it's important that we share those messages face to face, that we are close to the people who are close to risk. Now obviously brokers, their biggest value add is they know their clients. So one of the rating factors that's always very hard for us to build into our rating models is the knowledge that the broker has of the risk. And so keeping close to the brokers, I think, is really important in that space. So being there, being in the regions, being close to our brokers. We've also invested now in in putting technical managers into our bigger centers to create this decentralized expertise as well on the ground to really help write the bigger risks. So there's no doubt from our perspective that if this is something that just Santam is trying to do, we won't be successful. We need our brokers to really understand the long-term changing nature of risk. We think that very often they are the risk advisors, they are the advice givers, they actually understand this in many respects better than we do. And we're looking to them too to help us along this journey, to help us improve the base rates, to help us identify the risks that really do weaken the overall risk pool, and walk this journey together to sustain what would otherwise be a very difficult thing from a risk perspective. If you don't have insurance in the market, it puts whole industry types at real risk. So together we think we can be very effective in getting the right responses from our clients and obviously ourselves as insurers.
We also want to use technology to give them tools, to build them tools that they could use that would help them to be more effective in the advice giving role that they have. And we recently developed, in fact we've just launched it, a self-survey kind of app that the brokers can use with their clients to just assess the risks. Whether they place the policy with Santam or not is irrelevant. It's actually to help them and guide them.
Yeah, so I guess from our perspective, we are looking to the broker to help us educate the clients out there. So we are spending time in terms of our own channels and that sort of thing. We're speaking at breakfasts and roadshows. We're talking about the changing fundamental nature of risk on the ground. But there's no doubt that we don't have the reach that our brokers have. So education is definitely key. But we also think that the nature of this changing risk has never made the value of advice more important. So in this world where there is so much complexity, there is so much more that can go wrong, this is a fantastic opportunity for the broker to really make a difference in terms of educating the client and also making sure that the right things are insured through these tough times. We would also like the brokers to really focus on the quality of information. I think we're in a space now where the digital age and the access to information is fundamentally different. The better data you have, there's no doubt that we can underwrite better. And in this space, particularly risk address. If we just have, for example, Florida, but not Florida, Johannesburg, Gauteng, when you put this into GPS tagging and all those kind of bits and pieces, you end up in the United States. The same as Orlando would be another one where suddenly you end up in the United States. So complete data is something that is fundamental to good risk management going forward. So we would help. We would look for help with that. Then I also think that we've moved into a space where regulatory compliance is not necessarily seen as something that is an onus on me to do. I think also what we're really looking at our brokers to do is that we've seen, and it's the reality of a broker. So a broker has the interest to look after their client, and they place the insurance with a various group of partners. If an individual client is not performing, I think we really are looking to the broker to say, how do we help fix that client? As opposed to the broker leveraging his book of business with an insurer, it could be any one of the insurers, to actually keep that risk insured, but by leveraging 10 good risks to protect that bad risk. So instead of fixing that individual client, the broker often will say to us, if we don't provide a solution as is, he will move that client plus 10 others somewhere else. Now, we understand that strategy from a broker perspective, and it keeps the client insured and the broker continues to earn his commission, but it keeps the risk pool under threat, in that now what you've got is this concept that we talked to earlier, where an individual is not carrying his own weight, and now you're being cross-subsidized by good risks. And as a broker, I think you run the risk of having your good risks now actually being overpriced, because they are there to sustain a bad one, and you stand to lose your good risks. I'm sure Shanaj will agree, we cannot underwrite successfully if we don't also focus on keeping good risk in the risk pool from a Santam perspective. So what's most important is the good risks are well insured at the right level and are not actually paying for the bad risks. For the bad risks, what we really need to do is work with that individual client, leverage the expertise of advice that the broker really brings, capitalize on all the risk tools that we are trying to deploy as a Santam, which is our risk server apps, which really take the IP, I suppose, of our survey processes over years and try and make them accessible through drop-down menus and guide you through a risk survey type of process that you can give a client a very nice document that will highlight all the risks. It's industry specific, so it's tailored against what your needs might be. Yeah. Our BR calculator to make sure that you calculate loss of profits correctly. Our vehicle calculators, get the right sum insured of vehicles. Our home contents calculators, which are also very interesting. Under insurance was such a big lesson from Neisner. You know, if we don't insure for the right value, but as a broker can't be expected to be a recognized valuator. That's not my job. But I can also direct my clients to where the right tools are to make sure. And
I think especially for clients, you don't want to be an uninsurable risk. So if you do not invest in this risk mitigation, you can't find insurance anywhere. And then you have to carry all that risk all by yourself. So I think it's to everybody's advantage, not just the risk pool, but to everybody's advantage that if you manage your risk better, you will be insurable, and therefore you can transfer risk rather than carry it all for yourself.
Yeah, so certainly we started to talk to our brokers about engaging in this. So it is a partnership approach. I think what they expect from us is to be visible and engaging. They want to be able to engage with us. They also, when we survey a risk, we do sit with lots of information around the specific risk, and they really want us to work better with them to share the outcomes of risk reduction requirements in particular. What was the outcome of the survey and that sort of thing. Related to this whole, what we call RRR process, risk reduction requirement process, there's a strong request, can you give me time to work with my client to improve the risk? And I think that is something that we're happy to do. But I think that's also where our learning has been. So if you've had a year as a client to implement risk reduction requirements and you haven't, then you have an insurer say we're going to come off risk. Now suddenly you want to go do all the things that you've had a year to do. It's told us almost that from a mindset perspective, your intention wasn't really to improve your risk. It was a requirement that you didn't really like. And so you said yes at the time, but you didn't have the intent. So can we also, I suppose, be upfront to say that encourage your clients to really do those risk reduction requirements, because it becomes an intent, and your aptitude or your intent to actually improve your risk is evidenced after the fact by whether or not you did those things timely. So we definitely have that. I think there's also, we talked a bit about earlier, there's a request from brokers for us to be very clear about a risk appetite. What are our decline lists? What are our undesirable risks? Don't push them into a space where they do work and want to try to bring that information back to Santam, and then suddenly we turn around and say we have no interest or whatever it might be. So I think that they're asking us to do that. We also have, historically over time, we have multiple different channels as a business, and Santam in particular, we've tried to build as many channels as we can, and that creates potentially some different channel pricing. So there's been a big push on us from brokers, and we've heard you. Give us the same price through every respective channel. Give us an equal playing field. If you're going to be hard on us, we understand there is a changing underlying dynamic that we've got to come right with. But don't treat your preferred brokers one way and your not so preferred brokers the other way. Be consistent about the risk, and I think we do understand that. I think it's also important to say that the more data you bring us, the more expertise you bring us, it does impact how we see the risk. So let your advice differentiate yourself as well, but we need to then, as the insurer, be responsive to that information. We've also been under pressure not to have a new business price and a renewal price, and to create this this intent almost to churn my book to get better pricing. That's something that's come through, I suppose, in the cell phone industry in particular. This whole fact that if you're on a contract, you get one thing, and if you want to go get a new contract, you get another price. So we're also seeing this thing about pricing. And then skills. So we talk about technology, we talk about changing customer dynamics, but do we talk enough about the fact that there's no replacement for good technical insurance skill? A system is as good as the drivers that you put into it and that sort of thing. So there's a real request for us as an insurer to really allow brokers to talk to skilled people, get skilled people making decisions timely and effectively, and make sure that we really are having proper, intelligent conversations to help make this thing work. And that talks to a rifle approach, not a big hammer or a big stick approach.
With insurance, it's never just about price, particularly when we talk about property insurance or liability insurance, because the nature of the risk that you're insuring and the size of the risk that you're insuring is different. As a result of that, we ask our brokers to look at the risks from different angles. We might come up with alternatives, and it's about mitigating the risk, or it's about managing the risk. And if you manage a risk properly, it's not just about price. Price is there, yes, for a reason, like we've said, to manage the premium pool, to ensure that the premium pool is sufficient to pay all the claims, but it's more than just price at the end of the day.